The next category on our list is balanced funds equity oriented, which means a larger portion of the fund's assets are invested in equity. The top 3 funds that Dhirendra has picked in this category are the Canara Robeco Balanced, which is number 1, HDFC Balanced comes in at number 2, and Reliance Regular Savings Balanced comes in at number 3. Dhirendra, last year HDFC Balanced was on the top of the list. Tell us what Canara Robeco Balanced has done in 2012 to score higher this year.
Canara Robeco Balanced, its large cap tilt has, has delivered superior stability, and that is what the primary expectation of a balanced fund investor. You are looking at growth and you want it with great stability, and you don't want to be exposed to substantial decline in a brief period of time. So, despite 30% allocation to fixed income, a very risky approach to, or a very different kind of equity approach can lend great volatility to such a fund. So on that front, Canara Robeco looks the best on stability.
We also should talk about Reliance Regular Savings Balanced at this point. It's popped up on a regular basis, although not at number 1. It's come up on a regular basis in your lists over the last 4 years. Is this a fund that you think a regular investor who wants stable returns can rely on?
I think so, because this is a fund which balances risk and return very well. Even though I don't like its strategy of its mid and small cap tilts, but on a 3-month basis, it has always been able to make a remarkable recovery, and downside it has been able to protect. Once in a while, it has also taken a larger fixed income allocation. So I think a nimble portfolio management that has translated into what we see on the equity character is getting compensated by its more agile management.
A quick recap of our top equity-oriented balanced funds for 2013 on Investors Guide. On number 1 is Canara Robeco Balanced. At number 2, HDFC Balanced. And number 3 comes in Reliance Regular Savings Balanced. Remember, these funds have been picked based on the consistency of their performance and, of course, the fund management strategy. Let's move on to our next category. These are our balanced funds that are debt-oriented. Right on top of that list, HDFC MIP Long Term. Coming in at second, Birla Sun Life Monthly Income. And coming in at third, Canara Robeco MIP. Dhirendra, when considering an MIP, first of all, what sort of time horizon should I have? What sort of returns should I expect? And tell us why HDFC MIP has been so impressive over the last few years, because it's always been one of the funds that you've recommended.
I would say that it is a long-term portfolio, 30% allocation or 20% allocation to equity, and here the expectation should be very straightforward. You are an extremely conservative investor. You have never invested in equity, and you want to beat inflation, which your fixed income will not be able to do, and you want to protect the value of your capital. So this investment is for you. So I would imagine that anybody investing in these funds for less than 5-6 years will be in for disappointment, because this 15 to 20% equity allocation can translate into some capital loss as well, or at least if not capital loss, then certainly it will not be able to beat inflation for a shorter period, which is not the deal.
Those are our debt-oriented balanced funds. Dhirendra, tell us, among the ones that you have listed, why does the HDFC MIP score over the rest of the funds?
It is simply, it simply invests more in equities. When we look at all other MIPs, it is they normally don't go beyond 15-18% to equity. Here is a fund which goes up to 30%. So, so one should clearly segregate. Don't get carried by the performance numbers. All these funds are not alike. Their allocation to equity and debt changes, and it changes over time. And the performance of these funds is derived from one, how high they invest in equity, and how frequently they change it. And if they change it in an inopportune way, then if they get it wrong, then they get penalized for it. So I would say HDFC equity has the highest allocation. It is the most volatile, and if you are a long-term investor seeking superior return with very nominal downside, then this is a fund for you.
All right, a quick recap on our debt-oriented balanced funds. These are the top 3 funds for 2013. On the top of that list is the HDFC MIP. Coming in at second, Birla Sun Life Monthly Income, and on number 3 is Canara Robeco MIP. Moving on to our next category. This is a new category we've introduced this year, and it's because of the kind of interest we've received from you about international funds. These are the best international funds to invest in, in 2013. There is a new trend in our market, of course, to pay a lot of attention to international funds. Right on top of that list is the Motilal Oswal Most Shares Nasdaq Fund, the Birla Sun Life International Equity Plan A. The Kotak Global Emerging Market comes in at number 3. Dhirendra, investing in international funds calls for a lot of homework. Now, I've noticed that you have picked up the Motilal Oswal Fund, which is really an index on the Nasdaq. Is that really the nicest, the safest, or the easiest way to get into the international market?
I like this fund for a couple of reasons. One, when I look at the portfolio, I think that these are the finest companies which will have. When I look at the portfolio, the constituent of this index, I think that they are globally competitive businesses. 50% of these companies, Indian consumers will be exposed to their products. That's one. The other is the competitive advantage of these underlying businesses itself will make them, they de-risk them from the US economy. And the diversification of their business across the globe, that makes it very compelling. Yes, there is a problem in a sense that we see they are all US domiciled investment. And if we see a reversal of the currency trend as we have seen so far, then there could be a moderation in return.
In fact, Dhirendra, we talked about international funds only last week on our Christmas special episode when you designed that special portfolio for us. There are several risks associated with international funds. Let's just, for example, take a look at the returns on the fund that we're talking about right now. 21% over the last year, has fallen about 8% in the last 3 months. What sort of volatility should we be prepared for when we enter an international fund?
There is an added dimension to any international fund, because you invest your rupee here, you buy the fund in rupee, but your rupee gets converted into dollars or whichever country, and that money gets invested there. So whenever and the underlying investment is being valued in a different currency, it is only getting translated into rupee for your dealing. So you are exposed to the currency risk. Besides that, it's also a function of where the global markets are headed. So many a times we see opposite trend, that Indian markets do well, US does poorly, and otherwise. And that is precisely the reason why you should diversify.
All right, Dhirendra, finally, a word of caution when investing in international funds. Can you give us a cap on our portfolio that we can put in this in international funds? What should we limit them to?
It should be, one should start increasing one's allocation, because we have, most Indian investors have virtually no exposure to international investments. And today I will be comfortable having a 25% allocation.
All right, so that's our international fund category. Dhirendra, they're picking the top 3 funds for you to invest in 2013. Remember, he also said that there should be always a word of caution, cap it at about 25% of your portfolio. On the top of that list is Motilal Oswal Most Shares Nasdaq, Birla Sun Life International comes in at number 2, and Kotak Global Emerging Market comes in at number 3.